Discord.
Well, I'll leave that on for a second.
All right, I will be recording. Are you ready? Or I mean, I can also clip it.
Well, maybe like give like 2:05 or something. Give people a couple minutes to get in here.
Perfect.
Anybody have any
Also, I'll
questions? How about
do.
that? Ask anybody got any questions first?
Yeah. Apparently, the question is, what are you drinking?
Oh, Chick-fil-A, Coca-Cola.
Oh,
Yeah,
sad.
yeah. Just I got the kids. I got the kids here during the day, so right now it's summertime. So obviously no drinks while the kids are here. So I only do that at night when they're passed out.
If you could talk about Celsius Network and how that's an opportunity to just take advantage of them getting wrecked, that'd be awesome.
Well, I don't know if anybody can do anything about that. That's the problem. They seem to have basically told everyone to go shove it. Moving all those funds off like that and sticking them in FTX screams to me. I mean, that just screams scammy to me. Maybe it's not. Maybe I'm wrong. But my goodness, how much? How many millions? Was it like $75 million just gone? Just
Amazing.
gone.
USDD depegged. It reminds me of UST all over. It's a shitstorm.
Mm-hmm. This speaks on things not having backing by dollars and having to be very careful about how we go about things because man, it's space is getting a little crazier every single hour. This is what happens in bear markets. Some people have never experienced a bear market before. This is round 2 for me. I was prepared this time. This will teach. It's an expensive tuition lesson, but this will teach everyone a valuable lesson. When it's time to sell,
Hey.
we got to sell. So,
One thing that I want to say while I have some of you guys here is that if fortune favors the bold, if you want to be bold, right now on Banker version 2, there's $100,000 available for USDT. Now, of course, you have to be willing to bet on USDT, which may be a very risky play right now if you think USDT is a vulnerability, and it might be. But the APY for USDT right now on Banker version 2 is 163%. So there's clearly a lot of volatile movement with USDT. Now that does spell trouble, absolutely. But this is a fortune favors a bold move. You can also short farm this, so you can borrow USDT against USDC and then enter Banker version 2 position. But it's very rare that there's ever any availability in Banker version 2. I just wanted to mention that while I have you guys here.
sweet. So, it's 2:05. We'll get started. So, I have this camera on for a second, but I'll fade it out here so you can see the whole screen because I got it recording, and if I'm recording, you can't see it all. So, I'll fade it out now. But a common misconception of technical analysis. Let's start with that first. It is not all random numbers and lines. It's not how it works. Essentially, we find a trend, whether that be up or down. And if it's up, we buy. And if it's down, we sell. It's very, very, very simple as far as that goes. Now, obviously, there's a little more to it than that. We have to be able to analyze that trend and find out how much longer it'll last, how far it's going to go, et cetera, et cetera, et cetera. But you save just as much money by using technical analysis as you make. Why do I say that? Well, we all saw over in the Assassins chat, we all saw this bear market coming. We were able to see this and go, hey, look, if this doesn't do XXX, we are out. And not only are we out, we're going to start shorting. What does that mean? Essentially, we're betting against the market. Now, why would we bet against the market? Well, the market ran very, very hot. And just like any hot pot of water, the water boils over and starts to spill. And when the water boils over, it doesn't go back in the pot. It literally never goes back in. It only comes out. And in an effort to make that water get up again, you have to add water to the pot. You can't just make new water. It's gone forever at that point. So, as a metaphor, when the pot starts boiling, you must run with it. We've seen these trends happen before. That's why we knew this was going to happen. It's kind of cyclical. Crypto in that aspect is cyclical. We have a run, then we have a bear market. Then we have a run, then we have a bear market. It's not like traditional commodities like Google or Apple or Facebook or whatever particular commodity you like, Bank of America, where it just goes up for 100 years. That's not this. And you must understand that HODL will only cost you money in the long run. Now, what do I mean by long run? I'm talking a year or 2 or 3. And in the world of crypto, things move very, very, very fast. You must be prepared to get in and out. And by in and out, I mean some things may take a week, some things may take 2.5 months, some things may take a day or 2. Obviously, I know not everybody wants to do that, and that's cool, and I get it. However, for those who understand you can make money on the way down and also save money as the down starts, that's what we're going to get into. So, number one thing you must do before you start shorting, before you ever start shorting, is you must identify the trend. You must know whether you're going up or down, generally speaking. And I like to give a map as a reference. I don't know where any of you guys are located geographically speaking, but I'm in upstate South Carolina. I'm about 10 minutes from the North Carolina state line. I'm nowhere near California. If I need to get to California, I already know Interstate 40 connects, right? It's only 45 minutes up the road here, and I get on Interstate 40 and I'm going to drive west. That's not the point. I'm still going to put it in Google Maps, and I'm still going to look to see which direction it is, AKA I want to figure out the trend. Are we going up or down? In the map sense, we would be going west, and I know that. So I'm automatically not going to look east, south, or north. I already know I'm going west. Once I start getting there, then I can hit the go button on Google Maps, and it'll zoom me down in my car and show me every single little turn as we go. But I want to know that general direction first. Now, I'm going to use the S&P 500 as an example. That's all. You can do this with any chart. It doesn't matter what it is. Any tradable asset can be shorted, essentially. You can find a platform to short it, and you can short it. So you can buy put options for the S&P 500, which is just an option betting on it to go down. It's a contract. You're not actually buying any shares. You're buying a contract. The same thing with crypto. You buy a contract to go down. You don't actually buy a token. But you can, and I'll show you a little bit about that, but that's it. But either way, we noticed this trend on the S&P 500 happening a while ago. We had all of this general up only, right? And you never have to be super perfect with this stuff, folks. If you think, oh my gosh, that's not right, you missed a spot. Doesn't matter. Just get close. No one cares how many times you hit the edge of the bullseye. We just care that you got the darts on the board, because if you get the darts on the board, you're better than 90% of people playing darts. All right. So this trend broke. When this trend broke, we immediately start looking for options to get rid of it or sell it, not to hold on to it and not to add to it. We only want to add to something that's in an uptrend. We never want to add to something that's in a downtrend. That's a misconception as well. You don't dollar cost average on downtrends. You dollar cost average on uptrends. Now, once we've seen a trend break, like you see this white line right here is broken, now we want to look to sell something or short it. We want to make money on it on the way down. How do you do that? Well, on this particular one, you would buy a put option on Robinhood or whichever platform you'd like to use. I like Charles Schwab Street Smart myself. I like the spreads a little better, and I like the odds a little better. They kind of hint to you which ones to take a little bit. Those are called the Greeks. Doesn't really matter. The point is, I want to show you this and show you that we started a downtrend, and we had little mini uptrends, but we never made a higher high. We only made lower highs. Therefore, there's your lower high. We never had an uptrend. We only had more downtrends. So I'm still looking down because we haven't, generally speaking, started back up. As this happens, we have short and short and short. And again, we're under the trend line. We're short. So now we know the general direction is down. Today, I saw just 15 minutes ago when I walked in here in the office, I saw a tweet from someone. Dow Jones down amid such and such and such and such. Worst. We already saw this coming. This was short on 6/9/10, my son's birthday, a few days ago, was the short signal for this. How did we know that? Well, the general direction is down. We were already prepared for this. We already knew this was going to happen. So we were ready. Where do you go short at? So for me, I use Kucoin for crypto. I short on Kucoin. How do you do that? Well, you open an account, and here's the account. Here it is running. If I wanted to short Bitcoin, I would go up here to the pair name. You got all these on the left. You can do margin tokens, which we'll talk about in a minute, but I don't want to do that yet. You can do different ETFs. It's really up to you on what you want to do. We'll go ahead and click on margin. And you see you got all these different ones here you can pick from. What about Flux? Yeah, we can pick Flux here. you see that the general direction is going down. This is a daily chart. I'm never going to short anything on the daily. Myself, I like to short-term charts, like super short, like 5 to 15 to 30 minutes. Why? I want to get in and get out. I want to get my money in and out. And I don't care about hitting home runs on a short. I just want to make a little bit of money here and there and save and prepare for that next uptrend. Now, everybody does that differently. Groot does it a little differently than I do. We have another guy, Tony. He does it a little different than I do. He'll go on the daily and he'll short it long term. You got enough capital, you can do that. But I don't particularly like to risk that much. I only keep a max of $300 in my futures wallet. Why is that? Well, if worse comes to worse and something crazy happens, I only lost $300. Ask everyone who's sitting in Ethereum or sitting in Bitcoin right now how it feels to lose thousands today. Thousands. It sucks. Well, don't do it. Don't do it. Don't put that thing out there to be taken. All right. And I understand people want to hold, you want to hold what you consider a blue chip. Understand it's going to lose value. And in fact, it's losing value so fast that we can bet on it to go down, which is what we do on futures. So obviously I'm not going to do this on daily. I'll go down to 5 minutes here and I'm not going to do a trade, but I'll show you how it works. In fact, everything is short-term kind of up right now. I don't like the Kucoin chart here. I just prefer using TradingView. So I'll go to TradingView here and we'll pull up Bitcoin and we'll go to the 5 minute just for giggles here to see what it looks like. I particularly use my same indicators that you see me use all the time, 821 EMA, fibs, support resistance, and I'll find a good position to get in or get out. Obviously, I have a bullish cross here on the 5 minute saying, hey, you should long this, not short this. Problem, I just told you the general direction is down. All right, if we know the general direction is down, we better be very careful about how we're going to go long on this because it's probably going to fail. And if you're going to get this long, you better get in there and get out real quick. That's the beauty of this is you don't have to stay in it any longer than you want to. You can just get in and get 5%, 2%, 1%, whatever. I don't care. Profit's profit. This is probably going to fail again. And we know this because the general direction is down. My God, look at that. Down and down and down and down. You got this tiny little up. Yeah. So if this is the case, I'm not going to take this short because short term, it's going up. I'm going to wait on that and not do it yet. People ask me about the leverage on Kucoin. It's only 5x for me because I'm in the US. If you KYC and you're out of the country, you can do 100x. You can do it on Binance, which is my preferred platform. Only Binance won't let me do it anymore because Binance doesn't allow US citizens anymore. So you can do 150x there on Binance. You shouldn't do that. You should only do low numbers, but some of you aren't going to listen and you're going to do it anyway. Just understand it's a big chunk of money. You bet $10 times 100x, you bet $1,000. You understand that? And that's going to go down very, very rapidly if you mess up. I don't have anything short right here on this particular chart. Let's look at the hour. 1 hour is even trying to creep back up over the AEMA here. Hasn't broken it yet, but it's trying to creep back up over. So I'm going to wait on this short. Still not good. Let's pretend this chart is short here for a second. I'm going to flip the chart upside down. If I'm looking at this, obviously it's upside down now. This is long and a little bit short and then long and long and long and long and long, all the way up here to this top number. It looks like it's trying to break this particular number right now, which would show me short. I want to do a short. Perfect. I'm ready. I go over to Kucoin. I pick Bitcoin. I come down here. My camera's in the way. I pick that I want to do let me move my camera out of the way here. I pick that I want to do a short. Obviously, you see you got buy, you got sell. You click on futures here. Make sure I'm in my futures wallet. Give it a second. Find Bitcoin here. BTC. There you go. It looks a little different in the futures wallet than it does the spot wallet. That was the spot wallet I was just in there. Now it tells you can buy long or you can sell short. I have $73 in here. That's all. Why? Because I took some money out. That's why. I moved it over into spot because I think at some point we're going to get some spot buys here, at least relief time, and get some small bounces. So I wanted to have more money over there. And I figured under $100, whatever. So I'm finding a spot here. Obviously, it's not short at the moment, but we just went over that. I'm pretending it is. I go up here to my leverage. Start small. You don't have to do 5x. that's just wide open on this particular one, and I don't want to do that, so I'll back that down to 2x. So now instead of a $10 sale, it's technically $20. It's a contract for $20. You're betting $20 that the price will go down. Now remember, 1% on the chart is 2% on what you sold, right? 10% is actually 20%. So think about that when the chart moves 1%, you actually move 2% because you bet double, all right? Do 5x, you can do the math on what 5x would look like, blah, 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 blah. So I decide that, I think this particular chart's going to go short down here to the 21 EMA at 24568, right? So I'd go up here, I type in 24568, and the order book would pop up here, and I think that's about where it's going to go to. Obviously, it's never going to, it may not go there right now, I'm just pretending, but I would type in a number here, roughly around my number where the price is. It's 23626. It's bouncing around back and forth around 25. Now it's 19. As you see, it moves kind of rapidly. This is where we enter our short. If it goes above this price, we're going to start losing money. Every time it goes up, you lose a little bit and lose a little bit. You can hit your liquidation price. Your liquidation price is how much you've got left over after you bet. If I bet $10 right now, I have $63 left over in my futures wallet. So I have some decent leverage. I have like $60 on the background and only $10 in, right? So that's a very small percentage of my money risked versus money saved. So I have a good liquidation price. If I bet $60 of that 73, now I've only got 13 in reserve. So my liquidation price is going to be very, very tight to the actual market price. And I don't want that. I want to have some cushion in the background. So in case this thing doesn't do exactly what I want it to do, have a little bit of cushion, I can lose a little bit of money, $3, $4, $2, $5, whatever, and I can stop. Right? If you don't do that, you're going to get burned. Never, ever just put all your money in this, every single trade. That's a terrible idea. Your liquidation is going to be so tight to the price that you're going to get broke real fast. So obviously the price is 23566. I think it's going to go down to imaginary number of 24000. I look for 24000. It's not going to pop up because it's so far down. All right. Obviously it's not going to work. So I'll pick a short price, roughly right around the price, but slightly over, because that's where it's going to fill my order. So 28 right here's 36, 37. So you see it's about a 10-point spread, 40 to 40. That's pretty close. It's going down between 0 and 10 points between the first price and the price above, right? Right now it's about 0, 1, 2. It's bouncing between 0 and 10. So I'll pick this price. I'll click short on the amount I want to do. See, I've got 25, 50, 75, 100. So 25% of $75, roughly $23. Okay. So that's how much I'm going to bet on this one. And I'll click short. When I click short, it'll instantly enter me into this. I'll actually show you here. Let's put this. Well, I can't do it. I won't let me do it. So let's do 0.05. There you go. Well, that's even worse. It's $118. It won't even let me go any lower than that. You see that? So $23 is the most I can short here. We'll just do it to pretend. I click short. It says confirm. I'm going to confirm. Passwords. Never. There we go. My order pops up at the bottom here. All right. It says that I've bet $11 on this. Okay. Realized profit and loss ratio, I've lost a penny, okay? And my liquidation price is 35,440. That's because I kept a bunch in the background and only used a little piece, all right? Now I've got a whole bunch left over, so it can go all the way up to $35,000, and I'll still be in this trade and not get kicked out or liquidated or all my money taken, all $75 taken. I don't want that, obviously, so I'm going to set a stop loss. What is my stop loss? Everybody always asks me that. For me, 7%. That's what I always do, 7%. However, I'm on 2x up here. So it's going to be 3.5%. I'm going to reduce that stop loss to 3.5% because technically I doubled my money here. That's technically 2x, so 7% would, half of that be 3.5. 3.5% down from the current price. Let me flip this back around because I just did this for real on here. That would be right here and here. 1, 2, 3.5% would be 22861 in that direction. What about up? 3.5% would be 24538. 24538 would be my stop loss. So I'm going to click on take profit and stop loss. Ask me what my take profit be. Don't even worry about that yet. Stop loss. I just said 24538. So I'll type in 24538. Perfect. Confirm. Now, if it hits 24538, it kicks me out and I'm out. I'm done. I missed this short. I lost whatever price that would be, $3, $2, whatever. I just lost $3 and I'm done. Hint for you, everyone. If you lose, walk away. Do not get emotional. Do not try to chase this back and do it again. You will lose. A very simple rule for everyone who's going to do this. I need you to understand very carefully that it's you versus me in this situation. Okay? Can you beat me? And if that's a no, you shouldn't be doing it. Secondly, can you beat me? And if you can, how many times in a row you think you can beat me? Because I'm going to get you back. It's you versus me in this situation. Someone else took a long right here where I took a short. Probably a bot, not the point. And just remember that bot has no emotions. Are you able to beat him? And how many times? And if you can't, you better be careful then. Better be very careful about whether you want to do it or not. You can also long just like you can short. Obviously, I'm just showing you short because the market looks horrible right now. It's went down so far, so fast. I actually think we're in due for relief more than more down. But the down may not be over completely, so we may have to wait on that. Either way, you see, I'm still down a penny here. What is my take profit on this? Well, I don't think it'll break the 21 EMA. So my take profit on this, if I flip this back around here to the other way, I think it was 3.5% the other way too, right? So I'll go down here, 3.5%. That's roughly this original bottom, which is 22792. So I'll go over here and type in 22795, close enough. And that's my take profit line. Done. Now you've locked yourself into the trade. You have a take profit set. You have a stop loss set. You've bet all of $11. I'm down a nickel at the moment. Okay. Is that really going to break my heart if I lose a nickel? No. Okay. Obviously I want to win, but I'm trying to give you an example. This is it. This is a contract, not coins. This is a contract betting on it to go down. This is 100% controlled by the exchange. If you don't understand that, they can just change whatever they want to change whenever they want. They can do whatever they want with this. It's their contract. You agreed to it when you signed up. Same for Binance. That's it for futures. That's it. Obviously, I'm going to tell you. Oh, one more thing. If you look up, there's a clock counting up here at the top. Where is that clock? There's a funding clock. Right here, funding settlement. Every 8 hours, you pay, if you're winning, a fund to the other side to keep them in the trade as an incentive to stay in, okay? Exchange keeps part of that. Right now, that funding rate is 0.0138, or just over 1%. 1% of your profit will go to the other person that you're going against just to keep them in. If you're losing, you receive that 1% in an effort to keep you in. I never stay in longer than that clock running down. Screw paying a fund. Okay, just give me my money and let me leave. I'm not going to sit around and pay funds. I'm not going to do it. Whether you're short or long, that's there. That will vary and change depending on the amount of bids and offers going on, okay? That may go up to 10%. I've seen it at 17% before during the bull run on XRP. It was 17%. And I thought, well, shit, I'm not taking that trade. I'm not paying 17% of my winnings to the other side just so they stay in. Screw that noise. No, thank you. Okay? And I walked away from that. So be mindful of that funding clock. It will count down on you. If you'd like, it cycles every 8 hours. Just start right after the clock changes to a new 8 hours and you get 8 hours worth of time to trade with. I particularly don't keep my trades open at night when I'm asleep. That's a horrible idea. Don't keep your trades open when you're asleep. If you're not sitting here in front of it, probably not best to do it if you can't watch it, because this will move very fast and you can get liquidated. It's not like spot where you own the tokens forever. Okay. You don't own shit here. It's just a contract. I never do more than the 8 hours, whatever the clock is. I never do longer than that. I'll just get in and get out and wait on the clock to change and do it again. I'm not going to pay the funding rate. That's it for Kucoin short futures. I mean, I'm going to chart it just the same way I would do any other chart. only on a low time frame. If you're curious of, oh man, I don't understand how to short and I don't understand what you mean by, I don't see a sell signal. Obviously, we have a sell signal on almost every chart here, but I'll just use Algorand for the example. Right here, we have a sell signal. If you don't quite understand that, I have an 821 EMA video for you to watch. You can watch it. I'll flip this chart around, just hit invert scale. Now this looks long. However, I flipped the chart over to show you that. This is short as can be. And if that's the case, you shouldn't be holding it. It's going to lose value. And as you see, almost every single asset known to man crypto-wise is down 80%. 80% of your portfolio has evaporated. It would be great to be sitting in stable coins and waiting on this to stop, like a lot of us are doing. I'm simply not going to hold on to anything that drops 80% in value, except maybe a woman. And I don't know if I would hold on to that either. So be mindful of what you're doing. Don't do anything stupid. If you have questions asked, don't jump in feet first thinking this is the way to do it. It's very enticing. You can make a lot of money. I do this full time. I have the time to sit here and do this. If you don't. Maybe get your feet wet and try it a little bit, but don't go crazy. Don't do anything stupid. This will wipe you out. I've said this before to people and they come back and tell me they get wiped out. I told you not to do that. Okay. I watch people throw thousands of dollars at futures and wiped out just like that. And I'm like, man, I told you not to do that. Yeah, I know, but I didn't listen. Well, I learned. Now, use my example. I've already done this. I've already failed at this and figured out what not to do. So use my example. And that's about all I got. Anybody got questions? Sure, there's questions.
Hi, this is Everford Tech. I have several questions, but I'm sure everybody else does. My first question is really just more of a math question. Would you say that your stop loss is your normal stop loss divided by your leverage?
No. My stop loss is based on my personal preference on what I'm willing to lose. I'll lose 7% trying. Okay. That's just me. I'm also never going to trade with more than 5% of whatever's in my wallet. Okay. I just did 2% or 25% or whatever it was a minute ago, just to show you for the example, but I don't want to risk anything more than 5 or 10% max of what's in my wallet per trade ever. This gives me plenty of background funds in the back to stop me from getting liquidated. Gives me some time, some wiggle room. And then 7% is the max I'm willing to risk. That's just after years of doing this, I've figured out that that's the most I ever want to lose at one time. Once I get kicked out on a stop loss, I don't go back there for a while. There ain't no chasing here. I'm not going to go, oh man, you got me. Let me get back in that. No, you set that stop loss for a reason. I'm going to stop and I'm going to get out.
But that's including your leverage though, right? Though, I mean, you if I remember correctly, you said that you were doing 7%, but you had to remember that your leverage was 2.
Correct.
So therefore you made 3.5. Is that correct?
Correct. That's the way I do it. You don't have to do it my way. You can do it a little different. And if you risk more, you have more that you're willing to risk, you don't have to follow the same guidelines. That's just what I've learned that's just what I've learned is my risk tolerance. All right. Everybody's got a different one. So people ask me that all the time. Everybody's risk tolerance is a little different because everybody's got a different amount of money. What might seem like a little bit of money to me is a ton of money to somebody else. And I hate to tell them, oh, it's based on this and this. Well, it's just what I'm comfortable with. If you're comfortable with, 12%, well, knock yourself out. Now, I'll also say that if your stop loss is normally 2% and then you're trying to half that, you're probably going to get kicked out. Okay. You got to give this stuff some room to wiggle around a little bit. Nobody's perfect. No chart is perfect. So don't go super, super, super stupid tight with your stop losses.
But the mathematical question is like, I think this is what you're asking. Like, if your stop loss is 10 and 10%, that's what you're willing to lose, and you're at 5x leverage, then you would do 10% divided by 5, and that's how high up you want to go. Like,
typically,
a 2% increase in.
Yeah, that's what I was saying. That's what I was trying to just.
Right. I answered it the wrong way. I'm sorry. Typically.
That's okay.
And if you want to, you can do a basic support and resistance line. Set your stop loss at the nearest level. Like if it's a long, set your stop loss just below the closest support level. That way, if it hits that support level, it doesn't kick you out. But if it drops below that support level, you're out. And just the same way with the short. If it breaks through resistance going up, and you've got your stop loss just above that resistance line, well, it's going to kick you out on the way up and stop it. So that's fine. You're good. You were shorting and it went up. So you got kicked out just above resistance. Typically, you'll see that your stop loss is going to be close to that anyway. So that's why I do 7% also, because a lot of times it's just roughly the number where the next support or resistance is. I'll set it there knowing, hey man, this might fail. And if it does, kick me out. I don't care. It's fine. I'll walk away. I like the math that you're doing. Don't get me wrong. But sometimes I'll fudge it a little bit based on support and resistance as well.
Sure. My second question is, do you ever determine multiple price points, like a more of a cascading thing, like you're going to short this point, short this point, short this point,
Absolutely.
and hit it on the way down, or do you only do one area?
Absolutely. You have multiple you can do. That's what Fibonacci retracement helps with a ton. This fib right here coming down was a downtrend. I just pulled it down. I want to see, does it break up? As it tries to break up, here's key levels for it to break. 30 cents, 30.9, 31.6. As you see, it's sitting over 30.9 at the moment. At 31.6 right here, that's another key level that I would think, okay, if this hits this, 50 fib is liable to fail. If it fails, great. If it doesn't fail and goes over this, I'm out of my short. Okay? Why? Because it's liable to keep going if it crosses over that 50 fib. If it
The trend has
fails
changed at that point.
Correct. You're changing trends. So I'm going to use these points as take profit along the way as well. That's up to you. Some people do them differently. Perhaps 25% take profit, 30% take profit, and then when you get to the last one, you got 45% left. You can take all your 45% if you like. You can take half of that if you like. Everybody's going to have a different strategy when it comes to that. I'm a first one to I'll grab my profits. If it's $10 and no one else made $10, well, I feel like a hero because I made $10. The numbers aren't going to always be astronomical here, but a lot of you guys are in DeFi. You understand that numbers aren't always going to be astronomical. That's okay. As long as you're in net winning, well, fine. That's okay. You can take a win even if it's a small one, because a small win is better than a loss 10 out of 10.
Yeah, and my final question is, do you look at the delta between spot and future to determine what your kind of volatility is? Because I've always been interested, like, how can someone take my stable coin and give me 15% or 20% a year ago? So I started doing research, and it basically led me down the point of, if hedge funds can get X, then they're willing to they're willing to take some of their profit, and so they started talking about the difference between spot and futures to determine that kind of bandwidth that the hedge fund or whoever would be shorting or longing would be using. Do you ever look at any difference between spot and future?
Not the price, but the order book, yes. You can look at the order book if you'd like and see that there are a ton of longs. Okay, well, guess what?
Right.
Guess what? You probably shouldn't be shorting. There are a ton of shorts. Well, if you put shorts on against the longs, you're probably going to lose. So if you want to skim over the order book real quick and look, you can do that. Please understand that most hedge funds are in a 100-year bull market. So of course they're going to put some in futures and run it up. Okay? Of course they are, because you're not going to lose. Almost all winning going up. Since 1935, it's been nothing but an uptrend. So be mindful that we can't be institutional. We'll never be that. That's only about 4% anyway. 90% is bots. And whatever the bots are doing, I'm going to do. Until that goes away, which likely never will, I'm gonna go on what the bots are doing. If that order book's stacked up with longs, well, I'm not gonna run up to short unless I see that on the chart and it's screaming short on the chart. You'll see the order book. You'll see the order book come around to that regardless.
Okay, thank you.
And if you're wondering where the order book is, it's right here. You just click on order book and you can, maximize and minimize, and you can see the amount of shorts and the amount of longs going down, and you can see that it's very narrow and it gets very wide and very wide and very wide. People have odd price points set or whatever. You can look through it and kind of come up to your own determination on what you think on that.
Is that the depth chart? You can use the depth chart as well for that?
Mm-hmm. Mm-hmm.
Okay.
You can also change the amount of slippage on the chart too. On the order book, you can change the points, and just where it's larger numbers and the chart, it shows a little different that way. The depth shows a little different that way.
Yeah,
They
I need
can
to get
see it.
way more familiar with just the whole interface. I use Kucoin, Hotbit, and all them, but they're all trading view. They're all Greek to me in terms of just other than basic buy and sell.
Me and Steven say this a lot, but our Patreons are priced the way they are on purpose. Mine is a fancy coffee and a burger. Okay. If that's worth it to you to learn how to short, then put $20 over here and $20. Okay. I get it. It's $20. But at the same time, if you want to learn, you can learn with $20 and you only got to bet but $1 at a time, right? No one needs to go crazy, but you
I
can
learn the
learn.
fundamentals.
In fact, I'm up 7 cents right here. I'm going to close this order right now. I'm up 7 cents. So I'll just limit close it. 100% confirm. The quantity must be a multiple of 1. Well, shit. All right, please input a price.
Yeah,
You know
by
what?
the
Let's
time you
just
do your
market. Let's just do
two
market.
FA stuff has changed.
Yeah, let's just do market. I'm up 10 cents. Confirm. No, yeah, cancel orders. Yep, cancel my take profit and stop loss. Boop, 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 boop. They all just popped up. Order filled. I made 10 cents. Today I win. Who got next?
I've got a question.
Go ahead, sure.
So what are the advantages of taking a shorter time frame on these, and instead of like maybe borrowing on Aave
Right.
and selling for
Okay.
like a longer term?
I
Sure.
love what you just said. That's an excellent idea. And short of the interest payments, no leverage, which is great. The difference on this is I can perform 12 trades in a day and never have actually bought anything or borrowed anything. It's just a contract. I like to get in and get out and not let anyone be able to do anything larger to me. I've already tried that game where I tried doing this future stuff on higher time frames, and when I won big, don't get me wrong, same time, in a blink of an eye, all your money's gone, and you don't have a chance to stop it. All right. One more little point. These are small orders on purpose. These orders will fill very rapidly. If you do this with $30,000, the order will be so big that when you try to get your stop loss in, it'll blow right through it. Why? Because your order went from down here, floating around to zoop, way up here. And now the market is below your price and your order's never going to fill because other people are getting their orders filled. So never do a stupid amount of money on this because you're begging for it to get busted. They're not going to be able to fill your order and your order will get passed right over. Or your take profit will get passed right over. Okay? And that sucks. A lot of stuff was popping up on Twitter with these people with $1 million or 1,000,000% shorts. That's great. Try closing it. Who's going to buy that? Nobody. Nobody's going to buy that short. You can't close it because no one will buy it. So it's just sitting there. You've got to take a worse price to try to get rid of it now because the market and what you're trying to sell at are much different. Luna was being shorted down to a penny. Well, it was $100. No one would buy it at a penny. So you've got to sell it for $14. Well, all that shorting you just did was useless. You had to go all the way back up to $14 again just to get rid of it. Be careful on the amount of money you spend on this at one time. That's another reason I do this short time. Okay. I don't distrust Aave. I like Aave. I like Comp. At a certain point, they're not going to be able to fill your order whenever you go to get it or get it back. Right. You loan and borrow and then you go back to do it and they won't take it. All right. I don't want to see that happen to anybody. That's the only pullback I have against what you just brought up, which I like doing that. I like taking some USDC or whatever, borrowing FTM and then watching FTM fall as I sold it right before when I borrowed it. I borrowed it, then I sold it to USDC. FTM falls off the face of the earth. I wait for it to be a confirmed buy signal. I buy that FTM. Whatever that drop was, I win. I pay back my loan and I keep the rest. That's a win-win-win. That's DeFi shorting, and that's a solid plan, especially if you see that on the chart. And almost every chart was giving you that opportunity. Here's AVAX. I mean, everybody loves to talk about how wonderful AVAX is, but that is the definition of short. We had a short signal on the weekly back in April 18th. Before that, we had a short signal on the daily April 5th, and since then you've done nothing but made money. If you borrowed AVAX and sold it, and then it ran all the way down, and you were to rebuy it right now and pay your loan back, you would have made 81%. You borrowed 10 grand, now you have 18,100 plus your interest payment, so maybe 17,500. You won. That's it. It's not that complicated. You get to make money on the way down, okay? It's a beautiful thing. It's a beautiful thing. Not only can you sit in stables and do nothing and get paid for it, which is a little risky right now, you can also borrow, sell, watch it fall, and then rebuy. You get to keep the rest. It's a killer deal. I love this is the beauty of DeFi for me. This is what I really, really, really like about.
Quick
And
question.
for anyone listening, can you guys hear me? We're also going to be doing DeFi shorting strategies on Wednesday. So this is mostly for like centralized exchanges and how to short on trading. On Wednesday, we're going to go over DeFi shorting.
Okay, great.
You can't get liquidated on DeFi like you can on futures either, which is cool.
Well, you can get liquidated though.
It's a little different. What I mean.
It's
a little different. What I mean.
Right. Yeah. Mm-hmm. Different liquidation mechanisms.
Yeah.
It's kind of.
Can I jump in for a question?
Sure. Go ahead.
Sorry,
go ahead.
Quick question. First off, I'm in both Patreon groups, both
cool.
with Steven and with Keith, and I highly recommend to anyone listening. They're excellent. My quick question is, I'm assuming this is in a self-directed IRA because all those buying and shorting, there's that short-term capital gain. So some color you can give on. I know this is not CPA or financial advice, blah blah blah, but high level for you, I'm assuming it's self-directed. And two, I actually bought one of these Udemy courses on some type of mathematical arbitrage, effectively building your own bot. And you mentioned following bots. Mm-hmm. Is there a case for just throwing money into a bot and letting the bot do everything for you and just walking away a winner?
You just learned about Goldman Sachs. That's all they do. That's all they do. They have people running bots. That's it. They laid off 1,100 traders. They just do bots. It's amazing. Now, you need the money to back that. That's what we've learned about running only bots. It's fine as long as you have a big stash to make up for it when the bots get stuck, because they will get stuck. They run into longs and all of a sudden the chart changes to short and it needs to DCA. You need to have the money for that thing to DCA so it can get back around to 1 penny profit and trade itself out. It can't do that unless you've got a big stack. What we learned is we started with 15,000, which is stupid, but we started with 15,000, made good money. Problem is the bots got stuck and they used up 11,000 of the 15,000. And now you only got 4,000. If the chart moves down 2%, you're stuck in these coins until infinity. That sucks. We don't want that. You need a massive stack so the thing can simply DCA forever to get back around to profit, which it will do. It'll DCA up, depending on how you set them up. They recommend 7 to 9 times a day. It'll DCA a particular trade unless it gets in and out fast enough. If you're Goldman Sachs and you have umpteen $1 billion, well, what do you care? Right? What's $20? What's $2,000? Well, whatever. That's the margin of error for them per trade. They don't even really care. The slippage doesn't even bother them that much. The first part, where you said about capital gains and stuff, Kucoin is not KYC, so forget that. When you KYC Kucoin, these are contracts. These are not trades. These are contracts. So your futures wallet, when you put $300 in there and you take out 17,000, yes, there could be a capital gain on that. However, if you take that and reinvest it, there won't be. That's just the way not financial advice. That's just the way capital gains work, everyone. It's only a capital gain till it hits your cash wallet in your personal bank account. Till then, you can reinvest it and it's nothing. Don't give away tax money, okay?
Thank you.
You're welcome.
One question that I have, if no one else's question, is can you talk about how you experienced volatility loss or loss on the Kucoin ETF shorts?
Yeah. Okay. Something you need to know about
rebalancing.
Something you need to know about. Let me get out of this one. I made 10 cents today, so I'm tickled, y'all. This is the first time I've come in here and messed. I haven't touched. Let me go back. Where is it? I never use Kucoin on my browser. How about that? I always do it on my phone. And I know I'm not very good at this on the browser. Either way, ETFs doesn't matter. So we'll pull up the chart for one. How about that?
Oh yeah, I can help you navigate there if you want.
AVAX 3S. Yeah, there we go.
Yep.
Bam.
Okay, just real quick, I just want to make sure on this last point. So, as long as however long and deep you trade within these central exchanges, you don't account for any kind of gains until you move it to an actual bank account. Is that
correct?
correct?
This is a futures wallet.
Okay.
It's a separate wallet entirely. That wallet, when you take 300 in and you pull 3,000 out, you have $2,700 worth of gains. If you reinvest said gains, you're not going to have a capital gain. You didn't gain anything. You reinvested it. Get that? It's a gain when it hits.
So your
wallet.
gains and losses are real, but they're not realized in terms of capital.
Exactly. There's a difference between real gains and realized gains. Okay.
I got you.
If it's not realized into cash, well, it don't mean shit technically. Any good tax guy will tell you that. Don't give away your tax money. That's the best thing I'll do is tell you to hire a pro. I hired a pro and it was great. Steven uses the same pro, I believe. So
yep.
He's a good dude and he'll tell you straight up what to do and what not to do and what to mess with and what not to mess with. Some of you guys ask why I don't accept crypto. There's why. Because my CPA and my lawyer both said, I want to wait on that one. And I didn't do it because of that. If I don't know, I ask a pro. All right. It's real simple. I don't know everything. I've had to ask several pros. And they gave me good answers. So I'm working on the crypto payments now. It's just not easy. So the AVAX.
Is that CPA on Patreon, or is there anybody that you guys recommend?
It's pinned up in the unlimited chat. You just go to the pins and search. Tell him I sent you. It'll be a minute before he gets back to you. He's a one-man operation.
Sure.
So just bear with him. These margin coins or margin ETF coins here. So essentially they're 3x leverage for you. Okay. If you pick AVAX 3S, that's obviously 3x short. I'm buying this coin. Technically, you're not buying a coin, you're buying a contract. I'm buying this contract for this coin because this is a short coin. I want the chart to go up and increase in value. If this is a long coin, I want the same thing to happen, but I want to make sure that I'm reading it right. So if you look carefully here, AVAX 3x short. If you buy a short coin and it goes up, great. This means the real chart is going down. All right. You want the short coin to go in the opposite direction of the chart. All right. Be careful with this. You got to be very careful because if you don't, you're going to mess yourself up. If you look at the regular AVAX chart again, obviously it's the dead opposite. You're betting against AVAX when you buy a short coin. All right. Please understand that you're not going to get liquidated on these. They'll let you keep this contract open forever. However, it's 100% controlled by the exchange. Any given time, they can completely affect supply and demand as they wish. What does that mean? Do you guys remember when Kucoin affected supply and demand? What happened? They can do that with any margin token they want. They are very poignant in telling you, get in and get out. These are not long hold ideas. This is a margin token. Get in and get out. Do not hold on to it. And you click agree. All right. And if you don't understand that, don't do it because they're telling you we're going to affect it. And when we affect it, you're going to get screwed. So be careful. If you're going to get in and get out fast enough, it won't matter anyway. Right. You're going to get in and get out so fast it won't matter.
If you look at the near 3S or the near chart on 3S, I think that's a really interesting example of where they rebalanced, and that would have wrecked a lot of people.
Which time? Oh yeah, look at this, son of a bitch.
Right.
Look at that. That's exactly what he's talking about.
It's great if you were shorting, but if you were longing, that would have been really terrible for you. So like they rebalance now and again, but from my understanding, like you realize whatever the chart says. Like they don't rebalance your funds; they rebalance the underlying assets values. And so whatever the chart looks like is what you're realizing or losing. Is that correct?
Correct.
Okay, cool.
And another thing, we've tried our best to chart fibs and stuff like that with margin tokens. It doesn't quite work as good, and I believe it's because of the supply and demand manipulation factor. It's not a regular chart. So when it comes to buy sell, you can do it. But when fibs come in, you really, the numbers aren't there for me. I'll tell you guys right now, if the numbers aren't 60% plus for an indicator or a strategy, I don't do it. All right. I won't even put it out there that I talk about it if it's not 60% plus win ratio. I'm just not going to gamble. All right. The numbers aren't good enough on this to pull fibs on it and get deep on it. 100% trend analysis, sure, and 100% buy sell, but that's it. I'm not going to try to hyper price point this. I'm just going to buy and sell based on the indicators. I can't go too deep on margin tokens. Again, you really shouldn't anyway, because they want you to get in and get out. They don't want you to hang on to them. They will rebalance on you. And when they do, you're going to see that chart pop up that we just showed right here, right there. Bam, they rebalanced. Great if you're shorting. Great if you're shorting, because they essentially took a bunch of short tokens away and they were already there, and then boom, the price shoots up. They don't want everybody to keep shorting because it's costing the exchange money. All right. They're pulling the tokens out, so you can't do it as much. All right. Or they add tokens to change the amount that's in there, so it's not so easy for you to make a ton of money. All right. It's the exchange's contract, and they make all the profits on this when you lose. You're not going against the person, you're going against the exchange. And they win. The house usually wins. You ever been to Vegas? The house usually wins.
So just to piggyback on that, you would never do a margin token on Bitcoin or ETH. You would just do futures because there's no manipulation. The only reason why you would do these margin tokens is if that coin wasn't on the futures market. Is that fair to say?
No, I mean just margin tokens. Just margin. They're all margin tokens, 3S or 3L, depending on which exchange. It doesn't matter. 3S or 3L. They're all 100% owned by the exchange. They're fully manipulatable. Fully manipulatable.
Let me rephrase. Why would I, if I was short Bitcoin, why would I do a 3S Bitcoin if I could just go to the futures market on Kucoin and do a 3x leveraged short there without manipulation?
No liquidation. Margin tokens don't have liquidation. You can hold on to these tokens forever, even though they tell you not to. You can.
Your risk of manipulation, not liquidation.
Correct.
Gotcha.
You can get liquidated on futures very fast. There's a limit to how much you can lose. And on margin, they'll just let you lose all you want. That's the better way to put it.
And with these, the ratio, like it says, it's a 3L or 3S. That's not a perfect ratio because, as Keith said, it's dependent upon supply and demand, which the supply and demand can be manipulated exchange side. Now, I kind of like these a little bit more because I'm lazier and I don't want to do fast trading. It's not really my thing. I'm a little bit slower, still learning this GA stuff.
Perfect.
But it is one of the risks associated with this is that the liquidity is manipulatable, and additionally, it's not an exact ratio. Like you don't always realize that 3x leverage that they advertise in the margin token.
Absolutely.
Is future the same thing as an option?
No, options are different. Options are similar but different. So it's still a bet either way. And an option, you're not actually buying the shares, you're buying a contract, just like a futures. So options have a strike price and an offered price first. That offered price is based on odds makers or Greeks. All right, just like betting on horses, you have an odd. All right. The favorite horse is not going to make you as much. So you can bet on the favorite option, but you're not going to make as much. Or you can see that other options are available and they're cheaper. You don't have to bet as much. You can make more, but it may not ever happen because the strike price where you actually go into profit will be much different. Okay. They all fluctuate a bit. So it's different. It's a similar idea, but it's, you can buy fractions of everything in crypto, and you can't do that in the stock market. That's the reason for options. All right. You can make way more money because there's leverage involved with options, where normal stocks, where if you buy Google, the shit's $1,000 a share, you can only buy 2 shares. Well, what are you really going to do, right? How much money are you really going to make? Well, with crypto, Bitcoin's 80,000. It doesn't matter. You're only buying $20 anyway. So futures is the reason you're not going to see many options for crypto. The amount of fractional stuff that you can buy takes away the need for options. That may change on the stock market eventually, but not anytime soon.
Yeah, because I
It's
started
to
taking a look
piggyback-
at FTX a while back ago, but I didn't. I got involved in other things
Yep.
in terms of the exchange.
To piggyback off the options versus futures, futures is leverage trading on an underlying asset. Options is creating a contract that is an agreement to buy or sell an asset at a certain price, which is called the strike price.
Mm-hmm.
So effectively, it's just contractual obligations to buy or sell assets at a certain price for either the put contract writers or the call contract writers. So, like Keith said, there are a bunch of odds making that goes into that, and the premium you get on those contracts is based on those odds making. There's no odds making in futures. It's purely a leverage ratio pegged to the underlying assets price.
Mm-hmm. Yep, you're totally. It's one-on-one. Who's better? Right. That's it. There's no odds. It's just one-on-one. Who's better? Where with stocks you have. There's multiple other factors there. Obviously, it's been around forever, so they have perfected it, so to speak. Crypto just hasn't.
Right. You will literally get paid for volatility. Like volatility is one of the odds makers that will increase the premium when you sell assets. It has nothing to do with what you make in futures.
10-year bonds are up 10% today. Jesus Christ. Keep going. I'm sorry.
Now, when you were doing bots, did you do like Pionex or did you use Kucoin bots or
No,
make your own? Or
the ones on the exchanges aren't very good, and they're that way on purpose because they're gifting it to you. But the good thing is, if you're going to do that, it helps the exchange kind of stay valid because then they have liquidity on hand, which is great. They need liquidity just like a bank. Banks need liquidity. I didn't use those. I did multiple different ones. I tried one on Creel. I ran one on Creel for a while, and it made 1% a month, maybe. In crypto, that sucks, especially during a bull market. So I took that money out, and eventually I moved that money over to Block Party. Block Party has multiple different bots, but I was using their DCA, one of their DCA bots, and one of their other bots that they didn't call DCA. It was something else, but then they had futures ones comes out. So I had DCA bot running, spot bot running. That's what it was, just a spot bot, and a futures bot running. 3 different ones. Like I said, they did well. Problem. Anything happens, you don't have the capital to back it up, you're stuck. Essentially, you got to bump the numbers way down on what you make every time to make the liquidation that you, or the liquidity that you have behind it hold up. You need to bump the numbers down.
Your collateral ratio then, right?
You got to have a huge collateral ratio, and you're not going to make anything that way. So you need it, but you got to scale it way up, if that makes sense. The scale is what's important there. I mean, if you put $300,000 in, great, you're going to make 2%, almost 2% a day. But the thing is, you had to put 300 grand over there. Well, I don't got 300 grand laying around, so I'm not going to do it. Plus, now someone's trading for me, and I don't like that. I learned my lesson a long time ago about letting people do things for me, and it only ever cost me money. Bots are cool, don't get me wrong, but you really need the capital behind it. They run the show. 100% they run the show, and they're going to continue to run the show until something changes. That's unfortunately just the long and thin of it. There's a good documentary here, by the way, about bots if you want to watch it. You know, Vitho right here. This is called Flash Crash 2010. It explains how Apple traded for less than a penny. There's a chat in here, isn't there? Yeah, right there. Right there, paste. There's a section in here where they talk about it, how Apple traded for less than a penny 10,000 times per second. Show me one time in history that's ever happened. It's not there. Well, the exchange, the Dow Jones and NASDAQ and S&P actually removed all those trades because they happened, because someone beat the bots, and then they canceled him, and he's not allowed to do it anymore. So 90% of them are bots.
He doesn't need to worry about it.
Yeah, now he works for a company that helps people beat bots. All right, so you go ahead with that if you want, but I'm sticking with the 90%. The 4% people, retail, and the 4% institutional, they're going to do their thing. I'll stick with the 90%. Goodness, these bonds. Go ahead.
All right. Any other final questions?
How do you prepare for your positions? I mean, I know you say you look at charts, but are you looking at many charts and you're going to short, say, 10 different coins, or how do you prepare your positions?
All right. After
Before
you
you answer that, I want to let aspiring adult ask a question because I think they were trying to get a question in.
I was about to do the same thing. Go ahead.
I appreciate it. I do. So I've noticed sometimes that there would be a price difference between the BTC USDT chart and like the BTC perp futures chart on TradingView. So if I'm trying to short a coin, if I see that one perp chart has a bigger difference in price, is that a good thing or a bad thing?
Okay.
Do I want to look for ones that are above or below the traditional chart? You understand what I'm saying?
What you're explaining is arbitrage from one exchange to the next. Problem. It's going to move so fast that you don't have time to get your funds from one to the other to make up the difference. All right. So if you're going to, usually the arbitrage is small. Sometimes it's different. Now, when Strong was a happening thing, you could see Strong on Bitrue trading at 300 and Strong would be on Uniswap for 275. That's a huge difference. Now, most of the time you're going to see decimal point differences. And you're not going to have time, short of moving a very fast moving blockchain asset, to get over there and make the difference up. When you're doing this and you're using TradingView, make sure you're using the perpetual contract exchange on TradingView that you're going to be actually using. Like if I pull this up, BTC perp, I'm sorry, I didn't do that right. BTC USDT perp, and I go to all here. All right, my Binance. I'm going to do this trade on Binance because this is the Binance perpetual chart. This is the exact same chart on the exchange. Only the exchange's chart's kind of glitchy and this one isn't. So make sure if you're going to do this on Kucoin, you use Kucoins. Trying to chase that arbitrage is touchy at best. You need to make it.
This in terms of like chasing a particular arbitrage, but more so of looking at different coins and choosing which one I want to trade, either that day or whatever. If I notice there's a bigger gap.
Okay. So using the arbitrage in your favor to trade it. That's possible. I've noticed that the exchanges with the higher volumes tend to do better. If you sound American, I don't know if you can trade Binance. But a lot of times Binance will have the true price. When I say true price, I mean the most accurate price because the most volume's there. And something like Insignia Exchange, because I'm looking at an Insignia screen right now. Insignia Exchange doesn't have a tenth of the volume, so theirs is going to be much more volatile and there'll be much more arbitrage there. You can try that if you want. I've tried that before and I've not had great success with it. I know what you're talking about, and I don't particularly do that. When I'm looking for a short or long, it's strictly that chart in front of me looks this way. I see short on the charts, I'm not going to long. My mind is automatically made up for shorts. It doesn't matter which exchange it is. In fact, it's of my opinion that these things always balance back out in a very short amount of time. Sure, you might catch that arbitrage and make a hit, but it's so rare to catch it and actually be able to use it. If you do see a big difference between one price, so you want a long AVAX at $10 and over on Binance it's $17, you're likely that price is going to go to 17. And I see what you're saying. That's worth trying if you can catch them. But the problem is trying to catch them.
Good. All right. Thanks. I appreciate it.
You're welcome. Now, the other guy asked, do I do many positions or what? I never do more than 5 trades at a time, and I never do more than 2 or 3 futures trades at a time. It's just too much to keep up with. And I mean spot trades 5 at a time. Why? Well, you're different than me, but I'm looking at 400 or 500 assets a day. I'm going to forget which ones I did unless I write it down and highlight it and have a spreadsheet and a CSV file and everything else. So I never do more than 4 or 5 at a time. It's not worth the risk to me to put that much money on the exchange or that much money on the market at one time. It's a lot of risk involved with that. And today in the last few days is a perfect example of why I like to be risk adverse and take low risks because, man, the last week or two have been brutal. And this is exactly the point of Hey, back off on that risk a little bit during a bear market. Stop trying to go ham on every trade. It's not going to work. And then even with your shorts, yeah, you can make a ton of money shorting, but oh my God, be careful, because this thing can change very rapidly the other way. We've seen that before. 2020 was a great example of that. It can go very rapidly back in the other direction. Never go ham with this. There's no need to do that. Don't let influencers tell you what you should be doing. That is stupid. Am I an influencer? Technically. But I'm trying to help. It'd be different if I was just trying to sell you my shit all the time. Now that's not going to happen. So be smart. Don't open up a ton of trades at one time. That's begging for it. Plus, you're going to run out of money in your capital is going to run out in your futures wallet pretty fast anyway, and that's not a wise play.
Now you mentioned once you get stomped, get out. But what happens when you have a success in your 5-minute time frame? Do you keep in, or do you reassess, or what do you do?
Great question. Yes, if we win, I'll reassess and see if we can win again. Plus, if I make $301, the $1 gets taken out of the futures wallet that day. It doesn't go back in, and I try to make 700 and then 1400 and 20. No, the $1 comes out and goes to spot instantly. You can do whatever you want to with it after that, but take the money out. I never just sit there and try to build a portfolio in my futures wallet. That's stupid. That's not a portfolio. That's money that you're hardcore charting with. It's almost a little bit of a gambling money. So once you've made the money, any successful gambler will tell you, you made money? Well, take this shit off. What are you leaving it on there for? Me and Steven sat there at a table. He's already left because he's probably got a meeting, but we sat there at a table. Yeah, we sat there at a table, and he's doing the odds in his head and counting, and I'm like, yeah, so you're going to lose, aren't we? He said, yes. I said, if you win and you know the odds are in their favor, what are you going to do? He says, well, I'm not going to leave this shit sitting here. I'm going to take my money. I was like, exactly. Now put that to charts. Do the same thing with charts. And he's like, I see, right? So everyone has an epiphany moment. It was sitting there with the let table with him, and he was trying to count the numbers, and you can't win. So when you do win, it's a little bit lucky. Well, get that shit off. Don't risk it anymore. Now it's in your pocket. Move it from your futures wallet, your winnings, over to somewhere else. And yes, if I went on a 5-minute chart and I make a good trade, I can see my trade changing now from long to short. Well, I can short it just the same way as I can long it. I'll take a little bit, maybe look and see if I can get a short out of it. And if I can, great. Run that short for a couple minutes. Bam, I'm done. Right back looking for longs again. But again, we're in a bear market. I'm looking for more shorts than longs right now. So every time I make
you're always rebalancing your futures to your spot then?
Once a day. Yep. It takes 10 seconds. If I make $30, that $30 gets moved off, and I never touch it again. Not every wise. The best investors take their money out, and you never get to touch it again. People always say rich people are greedy and they hoard their money. Of course. Wouldn't you do the same thing? Yes. You would take your money and hide it from people so they can't get it from you. That's exactly what they do. That's exactly what rebalancing your wallets there are. Take your money. Everybody likes using a ledger, right? Or a Trezor wallet. You like hiding your money then, I see. So you're exactly the same as that billionaire, just on a lower scale, but exactly the same. You're not going to get my money from me once I get it from you. I'm going to take it away and put it away, and that's it. That money gets put up forever. All right.
Are you comfortable holding USDT?
No.
Or do you swap it for USDC?
I have zero USDT. I'll swap it to USDC in a heartbeat.
All right.
Or if there's an asset going up, maybe Algorand or Cardano or XLM are going up, I'll swap whatever's in that futures wallet to that one just for a day or 3 or whatever while it's going up, and then I'll trade it to USDC. I don't trust USDT. At the same time, I realize that USDT is used everywhere. You're telling me that every exchange is going to have to pull USDT off because all these perpetual trades are pegged to USDT. So all of them will be gone. All of them. I don't think that's going to happen. That just doesn't make sense. That doesn't make good prudence. In fact, I think USDC, I think there was like a $700 million infusion into USDT today. I'm not positive on that. I know this is being recorded, so I think that's the news I read. I try not to read too much news either. I don't trust people, in case y'all don't know that. Oh, it's his son's birthday. Let's go. Anybody else got any other questions?
If you have a string of losses and say your 300 goes down to say 215, then you really are having to take your profits back out from spot and put it into futures in order to continue, correct? I mean, what's your policy or what's your procedure at that point?
That's a big fat no.
No.
No. Now you're chasing the dragon. Don't do that. Once you put $300 over there and you lose it, stop and walk away. Take some time off. Take a month off. Think about what you're doing. Was that really a good idea? What happened? Why did you lose? If you lost, why did you lose? Write it shit down. Highlight it. People always ask me what my system is. Here's my system. Here's my system. I have highlighters. Good trade, green. Bad trade, purple. If I lose a lot, I highlight that in orange and I go back and figure out what I did wrong. I write down what I did wrong. Figure it out. Okay, Keith, here's what you did wrong. Learn from that mistake. And then if you're going to do this again, don't do what you just did again because you're going to fail again. Constant repetition with the expectation of a difference. Insanity. Okay? We don't want to do that. You don't want to compete. You don't want to continue to repeat mistakes over and over and over again. This is what's going to happen to all the degenerates right now. They're not going to learn anything and they're going to do this again. I talked to a gentleman who made $1 million, $1.1 million on Dogecoin during the run up. And I went, holy shit, you made how much money on Dogecoin? Yeah, man. I was like, well, what are you going to do with it? And he says, well, I mean, I still have my Dogecoin. And I went, wait a minute, what? And he said, yeah, I still got it. I'm not going to sell it because it may go up to $2 or whatever. And I pulled up the chart and I went, so you've lost how much money? You've lost, oh my God, Jesus, 92% of your money? Oh no, I've still got my Dogecoin. I mean, you only sell if you lose. I mean, you only lose your money if you sell, right? Haha. I said, no, you have $122,000 now. You don't have 1.1 million anymore. Wait a minute. And then he looks it up and he has a little mini heart attack right there in front of me. And I'm like, I don't know who told you that, but you lost big time. And he said, well, everybody was saying. I said, no, not everybody. The chart guys were telling you to stop. You didn't listen. Are you going to learn from this lesson is the more important question. And he was like, shit, I had no idea. And I'm like, well, now you know, right? Now you know. You're going to lose if you want to go against us. You may win short term. It felt good, didn't it? Now how does it feel? Because I told you, you may beat me one time. Are you going to beat me over and over and over again? No. Am I going to beat any of you over and over and over again? No. I'm not going to sit there and go toe-to-toe with Groot all the time. I'd rather not lose. So I'm going to win and I'm going to walk away. I'm going to win and I'm going to walk away. I'm not going to sit there and fight you back and forth and back and forth. You start losing. I remember the thing that I learned to trade when I really started getting into TA and I started learning, the first paragraph of that paper said, walk away when you lose. Walk away. And I didn't read that shit. I read it and I didn't listen. I learned my valuable lesson a long time ago and I'm not going to do it again. Please walk away if it starts getting bad. That's a true story about the Dogecoin, by the way. Anybody else got questions? Yeah. If not, it's been like an hour and 15 minutes or something. You guys can hang out. I'm gonna jump off here. Groot probably knows a good bit of stuff too. If you guys want to ask him some questions, are you on there, Groot, or are you just on here? Because sometimes he's not talking, but he's there. He goes.
I'm here.
Okay, sweet. Well, I'm gonna jump off, and you can talk if you want. He's got a slightly different strategy than I do. Okay.
Keith, thanks a lot, man.
You're welcome.
Appreciate it.